very warm welcome to the CNBC Africa special of the Hotel Investment Africa 2012. The theme this year is Recharge and Refocus. And we've just heard Arthur de Haas speak, and he is the chairman of Jones Lang LaSalle. And he was speaking about capital outflows. We're speaking about the money that is out there and some of the conditions that are still continuing, and those are the tough economic conditions that continue in the Eurozone, what has been happening on the back of the financial crisis, and what is happening now for the African continent in particular. And that is what the focus of this conference is about. And joining us on the panel is Arthur de Haas. I have introduced him. He's chairman of Jones Lang LaSalle. Next to him is Mike Maboyakulu. He's the Department of Economic and Development Tourism here in KZN, and he's the MEC. We've got Graham Wood there, and he's the managing director of Session1 Hotels. And we have Clifford Ross. He's the CEO of City Lodge Hotels. And then we have Jan van der Putten. He's vice president for Africa and Indian Oceans, Hilton Worldwide. A very warm welcome, gentlemen, and thank you so much for joining us. And Arthur, we are going to start with you. We're talking about a lot of capital outflows. We're talking about so much opportunity that is out there, and yet when we're looking at your presentation, not a lot of money coming onto the African continent. So I would like you to speak to us about some of the opportunities that your firm sees in the African continent.
Well, firstly, from a macro perspective, I mean, Africa clearly offers some very exciting opportunities given the relatively strong economic growth, driven in part by the evolution of and the discovery of quite a few recent commodities, oil, gas, coal, and so on, which is driving some of Africa's economies very strongly forward, although that is definitely diversifying out into other sectors as well. We've got a growing middle class here and so on. So investors are beginning to see Africa on the radar map. We're certainly seeing it from the point of view of manufacturers, mining companies, and so on, who are coming in and investing very extensively. Unfortunately, the real estate investment community hasn't really got the message, and in particular on the hospitality side, haven't really understood the opportunity yet. And one of the key purposes of an event like this, and one of the things I do when I travel around the world talking to investors, is to try and get Africa on the map so that people understand that there is opportunity here, despite some of the huge opportunities in other markets as well that Africa is unfortunately competing against, in particular in Asia, India, and China.
Graham, I'm going to come to you from Session1 International, and just to come to you because your company is wanting to expand into some African regions. So what are the opportunities that you are seeing from an operation perspective?
At this moment in time, our focus recently over the last 6 to 8 months has been largely in South Africa, because there are opportunities locally in terms of getting involved or investing in some distressed hotel assets. We did one acquisition last year, a property that was under stress that we were able to acquire, and then we bought the balance of the Formula One hotels out from Accor. Not that as a distressed acquisition, but that was in line with Accor's asset-light strategy. So for us, over the last 6 to 8 months, it's been largely what we can do in South Africa. There are projects that we are looking at in Africa, and we've got a project on the go in the Middle East at the moment. So we have a plan, and there is a pipeline, but it is not as aggressive as one would think, and it's in line with what Arthur was saying, that there's a little less activity happening in Africa than possibly around the world.
MEC, I would like to come to you, because when you see those numbers, when you see all that capital outflows, there were so many arrows and all of this money going to all these regions, and like I was saying to Arthur, not a lot of money coming to the African continent. Does that concern you at all?
Well, I think we must say that one of the things that we are looking at is that Africa is the next biggest thing to happen after Asia. I think there is no doubt about that from where we see it. If we to look at what the McKinsey report has been saying, that the fastest, out of the 10 fastest growing economies in the world, 6 of those are going to come from Africa in the last financial year, and that 7 out of the 10 in the next financial year are going to be coming from Africa. It clearly indicates that both the IMF report and McKinsey are identifying that the growth after Asia is going to come from Africa.
But Clifford, I'm going to come to you, also from an operational point of view. We do hear all this excitement about what is happening on the African continent. Is it translating in your business, though? Are you seeing that investment interest coming into your operations in the kind of amounts that people are talking about?
Our model maybe is slightly different to the other hotels in Southern Africa, where we normally go out and we do all the financing and ourselves, from internal cash flows. So going to the market for debt is not something which we have really done. But with a pipeline that we do have in place that we would like to certainly see roll out over the next few years into Africa, there certainly, I think, will be opportunity that this may need to happen.
Arthur, do you see this probably going to be the case, that perhaps the hotel industry is probably going to have to look internally in the time when it's difficult to be able to fund their own operations?
Well, yes, I think firstly, there is a lot of capital in Africa. I mean, a lot of capital being generated in many of these fast-growing economies. As I mentioned, several of the countries have got now major oil and other reserves that are going to produce a very strong cash flow. So there is money within Africa, and I think short-term, the first opportunity is for that capital to be invested into the hospitality sector, and we're beginning to see that in a number of markets. I think then regionally, investment within the region, I think, is another major opportunity, as indeed is the growth of regional travel and the growth of regional brands from within Africa, I think is a big opportunity. So I think all that will happen, and is already starting to happen. I think there's going to be a little bit more time before we have seen waves of capital come into Africa over periods of time, shortly after. Back in the 90s, we did see quite a lot of Asian capital come in, particularly into South Africa. We've seen some Middle Eastern capital come into Africa, and that is still around, and there are still a few Middle Eastern investors, but what we need to do is get the message more widely spread and to other parts of the world.
Jan, I'm going to come to you. Hilton Worldwide, you've got operations across the globe. What are you seeing on the African continent? Are you planning to expand here? Do you see more opportunity here than you saw perhaps a couple of years ago?
Yes, I think that's a definite yes to that. I think within Hilton we have seen a lot of interest recently in the last couple of years in the growth that you see taking place on the sub-Saharan African hotels. And we have a big pipeline in Asia, but we see the pipeline in Africa growing. At the moment, we have 9 hotels in a confirmed pipeline in the next 2 years to open, and it's in a variety of countries, from Chad to Nigeria to Tanzania to Uganda, and we see definite opportunities to further grow our brands, because in the old days we used to have the Hilton brand as the main driver for expansion, but in today's situation we also have our focus service brands, like Hilton Garden Inn, Hampton by Hilton, and we see definite opportunities to bring those to African countries.
I want to come to you, Graham, with your operations. From an operating point of view, it has been difficult when it comes to those operating costs and being able to make a profit with everything that has been happening. There has been a decline in how many people are able to spend that extra cash. How are you able to manage that, bring that down, and still make a profit in your business?
Yeah, it's fair to say that the last 3 to 4 years have been exceptionally tough. I was doing a talk the other night, and it was interesting when you compare RevPAR numbers in our industry. We're still, at the end of 2011, running a RevPAR lower than we were in 2007, 2008, and yet we've had big cost push inflation in our industry, whether it be rates and taxes and utility costs, etc., and payroll costs. So it has been a very tough environment, and we have to have been watching cash flow and watching capex and trying to maintain this balance between running efficient hotels and also investing in the future and keeping your existing hotels in a state of quality that you're proud of. So it has been a delicate balancing act, but I think we've come through it quite well. And I think that there are some green shoots of some growth, but we know by no means are we anywhere near we were 3 or 4 years ago. But I do think in our context, I think in South Africa certainly it's certainly bottomed out.
Clifford, are you finding a change in expectation? Because reading some of the research and some of the surveys that have been done across the globe, and not just in South Africa, not just on the African continent, but it seems the expectations from people that are staying in these establishments is changing. How are you meeting those expectations, particularly when it comes to cost? That even on the luxury end, you do have people that are saying, well, you know, we don't want to be nickel and dimed for every single service that we use. How then do you operate in an environment like that?
Right, it is a very tough environment that we're currently finding in South Africa, and to be able to keep up with trends which are taking place around the world, and have now become almost expectations of the clients, is difficult. But I think we're having a look at all of the input costs which we have as a business, and weighing them up against the expectation of the client and what we really can afford at this particular time.
I want to ask you, Jan, operating in so many different regions around the globe, what you see in terms of what governments can do in terms of policy or whatever kind of support to your business, so that you're able to, like, say, offset some of those costs, be able to operate in a way that is more profitable, in a way that is more successful.
Yeah, that's a difficult question to answer, because I think if we need to ask governments to help us, it becomes a very challenging solution to find. Overall, the answer would have to be that if we can operate in countries where infrastructures work, where there is satisfactory control on utilities, which is a raising cost. I mean, I think Graham said that, and we see that in many countries, that utilities are really a challenge in terms of cost base. But the answer to your question, Nancy, would really be, if the infrastructure works and has a solid and foundation so that it's reliable, then I think that will help the hotels.
I want to come to you, MEC, infrastructure. When it comes to that, I mean, that's a challenge. And here in South Africa, a lot of money has been earmarked to be able to develop the infrastructure in this country. And so just in terms of speed and in terms of pace, where you see the country going?
Well, I must say that South Africa as a country has taken a very bold decision. The fact that we are going to be spending in the region of more than 850 billion to R1 trillion in infrastructure clearly indicates the confidence of the state in investing to ensure that we actually make it easier for business to do work, but also that we reduce the costs of doing business in South Africa as far as we can. However, having said that, I think Minister Martina van Schalkwyk has made this point yesterday as well, that those of us who are both in the economic sector as well as in the tourism sector have actually observed that there's been a high increase on utility costs in particular, the so-called government-administered prices. I think in part for energy, South Africa used to be almost like everybody has a bonanza in utility in the past 5, 6, 10 years. But now the cost has actually gone drastically too high. It is those areas that we would want to see going forward, that we are able to find a way in which you can manage them in such a way that they actually do not become prohibitive for investors to be able to invest.
You've got a country like Nigeria, when Arthur was talking about how much development is happening on the African continent, it seems as though Nigeria taking a lion's share of what's happening there. So South Africa seems to be having to play catch up now.
Well, I think for us as Africans, first and foremost, we would want to welcome that any development that takes place and investment that takes place in Africa must be welcome, whether it takes place in the ECOWAS region or take place in COMESA or take place in East African communities or in SADC. And for us, it is important that we should see that. But secondly, we should also recognize that Nigeria has got almost about 150 million population. And for us, it is important to say, as Africans, we want to see a commensurate levels of investment taking place, so that the number of people in Nigeria also can be able to get employment, it can actually be able to address the social issues there. However, we are saying, if you look at the tourism figures and how they've been panning out, is that the ACDC has actually been growing. As a region, Sub-Saharan Africa, for instance, has been growing around about 7%. Now, I think for us, it simply says that there are huge opportunities there. However, governments across Africa needs to invest in infrastructure.
Arthur, I want to come to you, though. When your clients come to you, and I have asked you this question, when your clients come to you and say, is this a good buy in terms of asset, in terms of whether I should buy this hotel, this establishment or not, what is your key thing that you would say to them, particularly when it comes to real estate on the African continent?
Well, I think there are two major challenges. One is the fact that in their own home markets, for example, in the US at the present time, there are good investments to be had because of the distress that has been experienced there. So it's a positive and a negative. They've had the negative experience of the global financial crisis. That's driven asset values down, and therefore they've been able to acquire assets way below replacement cost. I think Graham mentioned that about some of the assets he's been investing here in South Africa. So there are great opportunities on their doorstep. So if that is the case, then investors will tend to avoid the risk and say, well, we'll stay at home and we'll invest locally. So that's the first challenge. And then the second challenge is they look at Africa and they say, yes, the fundamentals look good. We can see that the GDP figures are exciting. There, as the minister just mentioned, 7 of the top 10 countries in the world in terms of GDP growth and percentage terms will be in Africa this year and so on. So there's a good macro story. But then when they start to dig into the detail of it, and that what is going to be important for investors is ability to move capital in and out of a country, title deeds, can they own the land, rule of law, security generally, about if guests are staying at the hotels, particularly for the international brands, can be an issue and so on. And there are a number of factors that they then look at and say, it looks a bit complicated, maybe we'll come back and look at it another time, we'll hold back just for the moment. And I think that's one of the challenges that is being faced.
I want to come to you, Jan, because you're nodding on the back of that, what you're looking at when it comes to expanding your operations on the continent.
Well, I think there needs to be a solid opportunity for an international brand to be successful in terms of incoming tourism, both as well as business activities. But I think the point that Arthur makes in terms of stability and security, it's an important aspect for an investor to arrive in investing in hospitality-related businesses. So to us, we really look at what are the resources available, what is the incoming traffic in terms of both business as well as leisure, determining the attractivity of a location to go and establish a hotel. And I think that's a key aspect for all of us. I don't think an international brand is any different from a regional brand in that respect.
I want to talk a little bit about branding. Graham and Clifford, do you sometimes find that, and let me give it to you, Clifford, do you find that when it comes to that branding, that sometimes it can be a bit of a challenge when you have the Hiltons of the world and operating in the same space as you? How do you still manage to be able to put your brand across and still be able to make that a success?
I think some of the brands in South Africa, are up there with the best in the world, and I believe that the clients show that in their support of the different brands. And I think whether it's City Lodge or whether it's Southern Suns, now Tsogo Sun with their branding change, can stand proud, I think, against the Hiltons of this world, as well as other brands. And I think being in South Africa and having lots of people from Africa coming down to South Africa, and actually staying and experiencing what South Africa has to offer, they certainly are taking us quite seriously, I think, in the African continent.
I want to ask you, Clifford, to continue, because you were talking about your funding model and how you don't depend on the market to be able to fund your operations. And looking at that, I'm sure you're so grateful that you're not having to depend on the market. But of course, again, when it comes to your profits and how much money you've had in your business, there isn't that much, I would imagine, to go around. So how then do you able to offset all those costs that are coming in?
Again, it's a very delicate balancing act, and here, certainly within South Africa, because this is where we operate currently, we only have our hotels in South Africa. We're putting in many different mechanisms to try and bring down the costs of doing business in the environment, the tough environment in which we find ourselves at the moment. You know, whether they be on the electricity front, water reticulation, all of these type of things. You know, there are savings to be made, and you know, we're looking at each and every one of those areas in order to save on costs. And you know, produce a better return at the end of the day.
Graham, though, when it comes to expansion, when, not only just growing your business where you are, but when it comes to the African continent as a whole, is this not something that Africa should probably be looking at? You know, Arthur was talking about so much capital that it is on the continent that we're not depending on the outside, we're not depending on the markets to fund our operations.
You know, I think access to funding and capital is one thing. I think when it comes to expanding beyond our borders onto the continent, it's not an easy place to do business. And we've got to be frank about this. The cost of development was raised yesterday in one of the panel discussions. The development costs in operating in Africa are exceedingly more expensive than they are in South Africa. And I think it's a bit of a chicken and the egg, because as more and more development happens and projects get off the ground, then obviously competition should improve, and hopefully input costs will start to come down from a capital point of view. The other challenge that we have in Africa is getting access to the right location and access to the right land and the right partners. Because again, I think Wayne was mentioning it yesterday, it is imperative that we have the right partners in each of those markets that we play in. So it tends for us, and our model is very similar to Clifford's, you know, it tends to result in us being a little slower and more circumspect. And when you're an asset-right organization as opposed to asset-light, it takes you a little longer to be able to focus on where your development should be. So then,
from what I'm hearing from you, it makes it difficult then to be able to expand, even as an African player, to be able to expand on the rest of the continent because of those challenges.
Yeah, it does. I mean, it's those are the factors that you have to consider. Is it impossible to do business? No, it's not. If it was impossible, then we wouldn't be there. You know, we've got 10 hotels outside of South Africa, so we do play in those markets. And the advantage that we have is that we have the opportunity to leverage off the knowledge that we have gained in certain of those markets to be able to expand with our existing footprint. But it's just as a regional player, and being like Clifford being largely present in South Africa, it is a differing environment when you extend beyond the borders of your own country.
Yeah, and I want to ask you though, when you look at the different regions, I mean, Africa is not one country. We're very, very different. South Africa is very different to Zimbabwe. It's very different to Nigeria. It's very, you know, all these countries are very different, and the way that we operate are very different. The way our policies are framed are very different. So when you go into these countries, what do you look for? I mean, of course, profitability, but what do you look for as key for you to be able to grow your business in that area?
I mean, I think you need to have the resources to be able to operate, and you want to be operating a hotel in a profitable manner. So you need to be able to find, the business first and foremost, and you need to find the opportunities and the resources to operate the business. But as I said earlier, what we are really looking for is what is the market like. If there is a market to be able to establish a hotel in whatever level you're talking, whether it's a 4- or a 5-star hotel, that is the determining factor. And then secondary to that is then whether you are able, within the policies of a local environment and a local government, whether you're able to operate. And that's where it comes back to stability. And then you adjust the right brand, because I think what the gentleman on my right just said is very true. In South Africa, you have formidable strength in the brands that you have established. And even the international brands that you see in South Africa, like we compete, and we need to fight and work very hard to sustain that level. So that determines the marketplace. And in a healthy marketplace, there is a competitive environment, which then I think will help any country or any region drive hospitality and hotel business forward. So it's really it's a combination of many factors there.
Arthur, I want to ask you from the hotel perspective, you know, what should they have in place to get this finance? Because it is difficult for organizations, and not just for the hotel industry, but for various industries to get funding right now. How do they get that funding? What do they have to have in place to attract that investment?
Well, firstly, as Jana said, I mean, you have to have a strong business case. You have to be able to demonstrate that there is demand for the property, that it's going to be...
How do you compete against China, though? You're in Africa. How do you compete against that and say, put your money here?
Well, that's why I said, there are so many opportunities around in the world, and for an investor in Hong Kong, the opportunities just across the border from the special development area of Hong Kong into the mainland China, I mean, it's very compelling for them to invest there. So to go and talk to them, or even a Singaporean investor, about Africa when there are so many compelling investment opportunities much closer to home is absolutely a challenge. So you've got to have a very, very strong business case as to why the returns are potentially going to be more attractive, why it is perfectly safe and secure for them to put their money into an investment here, that they will be able to, if they wish, repatriate that money at a point in time, some point when they want to do that, and so on. And in some cases, making that case for some of the opportunities in Africa is quite difficult, because there is not the level of transparency in the market, there's not the level of certainty around land ownership and the ability to move capital in and out of a country, and some of the taxes that sometimes get attracted to moving capital around, and so on. So all these factors, so therefore having that longer term security in terms of political stability, and a strong functioning legal system, and a good financial system is all important for particularly attracting offshore capital. Now, regional capital will be, it's more familiar with, obviously, with doing business in the region, is more comfortable with the risks that are maybe involved in that, understands them better, and therefore may offer a quicker opportunity, and a short term might be the best opportunity.
Graham, do you find, though, and this is a question that I want to bring to you, MEC, but first I want to ask from the operator's point of view, are you finding, though, are we aggressive enough in marketing to get investors to come to the African continent and invest in this industry?
I think it's a little difficult for me to answer, because we're an operator and an investor, so we'll be seeking opportunities in those markets ourselves. So I think, but I agree what Arthur was saying. If you're sitting if Asia is where a lot of the capital outflow is happening, where the action is happening, and there's enough opportunity on your doorstep, and in China alone, as what Arthur was saying, China is still a relatively small market. Was still a relatively small number of hotels in China, given the size of that economy and the size of that continent in itself. So if I was there, I'd also be playing in that space where there's still huge opportunities to grow, and that's a market
MEC, I want to ask you this, and this is a question that I've asked, and I'm going to bring it to you in terms of, are we aggressively marketing the continent enough? Are we aggressively marketing South Africa enough? Because all these opportunities, we keep on hearing there's so much opportunity in the African continent. Why is that not translating into the amounts of investment that we will probably see?
Well, let me say that I think African countries are doing their best in marketing themselves into the global investment community. However, as we have heard, I think there are many, many stereotypes and many things that have been associated with Africa. It's going to take time before some of the investors warm up to what is happening. But I'm saying, in addition to that, you are seeing a number of positive reports internationally that are coming from independent people, whether you're talking about the IMF reports or talking about the McKinsey report, but also even the elections that are taking place in Africa that are showing that democracy is taking root. And I think what yesterday was presented by Chris Hart clearly demonstrated that Africa has turned the corner. And I think what is important is that the players, both politically as well as in the private sector, who are playing in the African space, we ought to be able to ensure that we give comfort to the investment market, that the market understands that Africa has changed, and Africa is changing. And therefore that those who are seeing that we're now becoming more constitutional democracies, and therefore that people who are investing in Africa will no longer find their assets being vulnerable, in the sense that people thought they would be in the previous years. So I'm saying Africa is changing. And in any event, even if you had opportunities in Asia, you must look at other areas for growth. And I'm saying Africa is the next biggest thing to happen for growth.
MEC, we are going to have to take a short break, and then when we return, we'll continue with the discussion.